Welcome everyone to the short video on FMCG industry analysis. I'll try and keep this video short and to the point. Kindly note that this video is for educational purposes only. All the information which I'm sharing on this video is publicly available information and on the internet. This is not a recommendation to buy, sell, or to trade in any specific stocks or commodities. This idea, the idea is to share a little bit of my analysis on what is happening in the industry so that you are well placed to take an informed decision. Kindly consult your financial advisor before investing. With that, let's quickly dive into the topic for today. What I'm going to cover is a bit of a technical analysis on where the FMCG index is, what are the key drivers and the industry trend, and what is the industry outlook and the value proposition for businesses in this industry. There has been, or recently, there has been a lot of noise around the FMGC sector, and the index has been falling. It has fallen by more than 15% from its peak, which is around the 66,400 levels, down to the 55,500 or 55,400 levels in mid-November. There are multiple factors which are impacting the FMCG sector. However, in this video, I have focused only on a few key elements. If you think that there should be more areas I should cover, please comment on the video. I'll get back to you with an answer. Let me first explain the basic setup over here, what I have before we get into analysis and interpretation of what the trend is. We can see at this, I've used a daily time frame chart for the FMCG index. Clearly, we've kind of put in the 50-day simple moving average, which is the blue line here. The red line here is indicating the 200-day moving average. I have also included the MACD index or the MACD oscillator over here. More about this later in the video. I'm keeping this simple and I have not added a lot of other indication because the purpose of this video is not to focus on various indicators or technical analysis, but it's more to provide a commentary on the industry. Let's look at some of the key observations which we see from this particular chart, right? Clearly, we can see that the correction has happened for about 15% from a peak of 66,400 levels to the 55,500 levels. The index has corrected. We do see a little bit of a pullback again coming up to the 200-day simple moving average. The index has continued to trade below the 50-day and the 200-day moving average. Uh, what I see further here is a death cross. A death cross is a situation where the slower moving average line moves below the faster moving average line. In this case, the 50-day moving average has crossed the 200-day moving average from above around the December time frame, clearly indicating some bearish trend over here. Uh, we can further see that the index has been in a lower high, lower low formation throughout September and right up to December as well. We've also noticing a double bottom getting formed around the 55,500 levels, right? There is also a rounding bottom which has been formed over here. What you can also notice is that the 200-day simple moving average has been acting as a dynamic support or a resistance zone, right? The index has kind of taken a bit of a support over here when it's way down. Again, it's taken a bit of a resistance over here. It's unable to break this, but we do see it kind of inching upwards again towards the 200 SMA mark, right? I think these are important parameters to note over here. Coming on the MACD or the moving average convergent divergence over here, we can see that the MACD line has crossed the signal line, indicating a change or a trend reversal here, which means that there's likely to be more bullishness in the market in the coming few days, is what this indicator is suggesting. Okay, this is not my recommendation, but this is what I can read based on the indicator which has been provided. Uh, this movement over here, it could mean multiple things. It could mean that this is a normal pullback happening in the downward trend. It's likely that there might be a bit of a shake-up or a consolidation happening here, and the index might continue on its downward journey. However, it's also possible, given that it's at a very interesting point, it could continue. It could hit the 55 or the 58,000 resistance point, and it could kind of move up from here on. What we need is a confirmation of the trend or the reversal before we start to look at any of the buy or sell options at this point in time. Okay. One important point to note here is look at the candles which are getting formed over here on the way down, right? These are huge candles. These are denoting huge momentums, strong sellers in the market, and hence you could see a drastic drop in the prices getting consolidated further on its way down. However, if you notice this upward move over here, very small candles, right? It denotes very little buying interest in the market or very little seller interest in the market. And like I said, this could just be a simple pullback from a downward trend, and hence there could be further weakness, further bearishness in the index, and it might continue to go further down. Just to have a quick recap, I think what we see is the long-term trend is bearish. The index is trading below the key averages, i.e. the 50 as well as the 200 moving day average. Over here, we do have a environment where, over the last two trading sessions, the prices have closed above the 50-day moving average, and the double bottom formation here could indicate a positive or a change of trend or a reversal of trend going forward. Let's break this down further to see what's driving this, right? So there are about 15 stocks in the index. This blue bar here is indicating the overall FMCG sector, which where we have seen the reduction of about 15% from its peak. These are individual stocks within that index and how they have performed over the past, how they have performed versus their peak. Clearly, if you look at it, out of the 15 stocks which form the index, about 8 stocks have fallen more than 20% from their peak. Particularly, Colgate Palmolive and Godrej Consumer Products have fallen by more than 30% individually. Uh, uh, right, and if you look at this, stocks over here have a single digit fall in them. Uh, if we try to analyze this further, clearly we can see a trend emerging, right? Stocks which are more on the liquor kind of an industry, Radico, United Spirits, UBL, etc., are more on the liquor side, and they have not had a huge impact or a fall in the prices. It's purely single digit numbers. Whereas you've seen businesses or companies which are more on consumer durables or personal care have dropped further, or the drop is a lot higher versus others in the industry, right? Now, the question obviously which arises is, why do we see a difference in this trend? Why is it that a few companies have fallen more compared to the others in the index? And what is it that's driving the industry and what the challenges they are facing? Let's look at the industry analysis basically and try and cover off some of the aspects which I think are impacting the industry. Again, this is purely based on information which has been available in the market. I was just reading through some of the materials, the investor relations type of these various countries to identify what they are calling out as the key challenges. I think one of the theme which is emerged is that the raw material prices have been going up drastically over the past few months. Uh, and on further deep dive, realize that palm oil is a basic raw material for a lot of areas, right? Palm oil is used in cosmetic products, in toiletries, in shampoos, and in soaps, as well as biodiesel and many other products. We have seen the prices, and this is one of the chart which I found on the internet, quite a useful chart. It basically is highlighting the increase of the prices of palm oil from September onwards. You can see a 30% rise in the palm oil. This is denoted in Malaysian ringgits per ton of palm oil prices. Why Malaysian ringgit? I'll get to that in a while later in the video. I think we've seen the price increase, and this, like I said, is essential raw material or an input for the FMGC companies, particularly for the likes of Godrej Consumer, Tata Consumer, Colgate Palmolive, etc., where it has been used for their personal goods and the consumable goods segment as well. Now, the question which warrants here is, what is driving this increase in the cost, right? Why is it that the palm oil prices are increasing? and what are the various factors which impact the prices. So just like any consumable goods or commodities, I think the demand and the supply of the product play a major part in determining the price of that particular product. On the supply side, the production of palm oil is impacted by the weather conditions, impacting the yield, the geopolitical scenarios, government policies, particularly in Indonesia and Malaysia. And I'll get back to the point as to why I've used a Malaysian ringgit chart over here. It's because Indonesia and Malaysia put together are the largest producers of palm oil, and they own around 60 to 65% of the global palm oil supply. Hence, any change in the policy or the weather conditions in any of these two countries has a direct impact on the prices of palm oil. Similarly, on the demand side, the government policies like use of hybrid fuel can have an impact on the demand for palm oil. Whether impacting, say, production of any other kind of oils, say soya bean or sunflower oil, will have an impact on the demand of palm oil, because it seems that all these oils are or can be used interchangeably, and hence if a production of soya bean, say, is impacted, for example, then the palm oil demand goes up or down depending upon what has happened there. Moving on, I think rebalancing the growth and the pressure on margins is another factor which is impacting the FMCG industry. Now, having gone through the investor presentation for most of these companies, one theme which emerges clearly is that the companies have decided not to pass on the entire cost increase to the consumers. Thus, it has caused a pressure on the margins of the companies itself, right? If you go through GPCL, or sorry, if you go through Gujarat Consumer Products Limited quarterly analysis, they are showing an increase in the underlying volume growth, which means that the volumes have increased by about 7% on a standalone basis. However, the net profit year over year in Q2 has reduced from a 22.8% to a 17.2% on a standalone basis. This clearly has or shows the impact of increased raw material cost on the margin of GPCL and other FMGC companies. Uh, what is the value proposition going forward, right? Clearly, the valuation for the FMGC sectors have dropped considerably due to the multiple headwinds around underlying volume growth, cost challenges, volatile raw material cost, and lack of brand royalty. Thus, for this industry to turn around, apart from the government policies, it is important for the prices of palm oil to stabilize. Consumer demand needs to pick up, for which again is dependent on multiple factors. I think the reducing interest rate environment can have a positive impact on the demand as well. If I do a quick recap of what we have learned so far, clearly we see a reduction of 15% in the index, with some trend reversal, rounding of bottoms, double bottom, and the price closing above the 50-day moving average, kind of indicating a reversal in the trend. However, a confirmation has to be awaited in terms of the clear direction before any investment decision is to be taken. This brings us to the end of this video. Hopefully you'll find the information useful. Please like, share and subscribe to this channel for similar content. In case you want to learn more or understand about any of the specific industries, please mention in the comment below and I'll try and cover those in future videos. Thanks all and have a wonderful evening.